What's up, guys? We're going to go over some stuff on this chart into the close today, mainly because we're kind of in a level here, guys, right at this moment where there's really not going to be a strong enough edge to trade. Really incredible follow through from that afternoon signal. I quite frankly didn't think they were going to get it through 90, and I thought if they did, it would only be a little bit of a trap zone, but they certainly are holding it up into the close today, which is actually really good for the big picture outlook, and we'll talk about that a little bit towards the end of the webinar today. But in the meantime, let's just go over all the stuff from today, kind of just get a feel for where the market's coming from, where it's going, and some of the spots that we were looking at today. So just a quick recap of yesterday. So yesterday was FOMC day, and I'm just going to clear the board here and get that mess off of our chart so we can just focus on just some of the important stuff that we'll be watching, of course, going into tomorrow and going forward next week. This is yesterday's action, pre-FOMC. Yesterday was a range day leading up to FOMC, which isn't really unusual. Sometimes we do have a trend into the FOMC meeting, but yesterday was more of a range. So yesterday afternoon, like we discussed in the webinar, and morning was fairly simple. We adjust for range days the same way we adjust a little bit differently for trend days. Yesterday was a range day, so once that range was established, it was simply just kind of scalping off the highs and the lows within the range early on. Then we had the FOMC rate decision, spiked up a little bit, ended up flagging, huge push, really nice move there, and then we came all the way back down to the key 50-43 area. This whole zone here between 37 and 43 is was a big level to me. 43 was holding all day yesterday. That was kind of where we were scalping off those bottoms pre-FOMC. And then after we had the big crash back down, it actually held again. Overnight, we had the small, kind of gapping up slowly all through the overnight session. And that brings us into today. So the market had moved up a fair amount overnight. And you'll also take note that there was a little gap right here. That's where the market closes for 1 hour for the maintenance period between 5 to 6 p.m. Eastern. So right in there, little gap, and then we actually grinded up. If you just look at the hourly chart, we really held that hourly chart trend very strong all through the overnight session and into the morning. So you'll notice that once we reopened the market for the evening, they just kept holding on to that hourly chart over and over again, and they tested below it here briefly, but managed to hang on. Coming into today, I was pretty adamant, for those of you guys that were following along on the stream, I was pretty adamant to the fact that there was no way we'd be looking at longs, opening longs today at those levels. We had already moved up enough overnight. Just like any time I'm looking for a trade after we have a big enough move to one side, I'm always looking for those longs to get cleared out before we can start looking for new setups. So I'm just going to get into the intraday chart now. We're going to look at the morning session. We'll start with the 5-minute chart. So this is the pre-market leading into the morning here. So there was two areas that interested me. So I noticed that obviously we had this flag about an hour before the open, and that flag rejected the 90 area. And there's a reason why that 90 area was a big spot, and there's a reason why we wouldn't want to be taking any longs on a flag like this towards 90. The big one is that fact that if you look at a daily chart, we've been in a downtrend in the daily chart, and that was exactly where the daily EMA was, which when we're trending, that's a big level to pay attention to. So that was acting as resistance this morning, which makes sense, especially after it came up off such a big run up overnight. Now, I'm just going to move to a 15-minute chart, and we're just going to look at the chart the same way on a 15. So here's the pre-market session. We're still in pre-market over here, right? So this was the flag, the first one. It rejected 90 pretty much to the tick right at the daily EMA. It pulled back, and then they tried again, another flag right here again, right before the open, and then right through the open, they tried to push it up to 90 again. If there was any bias that I had to choose there, it definitely would have been short. I didn't short it this morning, but this break of 76 was technically a reversal signal after two failed flags to the upside and rejecting that daily EMA at 90. So that created a huge pullback this morning. Now, there is a zone that we discussed earlier that we were very interested in watching for not dip buys, but bottom bounce long signals. So there's a big difference, right? Dip buy is kind of just blindly bidding in front of levels. That's something we rarely do. Generally speaking, what we're looking for are areas of interest that are big on the chart into large extensions that could offer a setup to play a bounce from. And as we kind of trapped those early longs buying up there near the daily EMA between 84 to 90 area, that helped fuel the move, I think, back down to the downside. And there was a whole lot of sell pressure. And like I always say, guys, it feels like when there's so many sellers in the market, it feels almost like as if it's never going to turn around. But there's almost always a point at which we'll find a pivot in that action. And today was a good example of where it felt like the sellers were never going to end this morning. We're actually closing the day over the morning highs and the pre-market resistance at 90. So as we started to really speed up with some volume to the downside, there was a couple levels of interest to me. One was this little gap fill area from yesterday over 55, from after hours yesterday over 55. We didn't stall at that area at all. Now I'm going to go to a 5-minute chart so we can see a little bit more closely to the action. So here's the breakdown level right at the open, two failed flags. That's, to me, that's technically a short signal. I typically don't short right at the open or even take a trade right at the open most of the time, but that was a sell signal, we'll call it, where longs would have to bail if they were playing these flags, if they're savvy at all to risk reward and understanding of how charts and structure works. So that was a big sell zone. I think they really had to let it go under these levels here, under 72, and this is where it really started to waterfall down. Now, this whole zone, so yesterday there was a huge level at 43. We discussed that just a moment ago. That's going to be a huge level of interest for me to be watching for bottom bounce long signals. Today it was unfortunate that it didn't actually set up our trade because we often do get setups down there, and this would have been a great day for it because it ended up being a huge pivot back to the upside. And this is where, like we talked about yesterday, we had, I think, two bottom bounce long signals yesterday, and those signals reached, I think, 2 targets each, and then we were able to sort of exit them around break even on the trails. But this is why I love that setup so much, is because when it turns into a full pivot, you can trail these sometimes for hours or days, and they absolutely can provide some of the best risk reward out there. Luckily today there was a secondary long signal in the afternoon around the 50-65 area. But I was like I told you guys this morning on stream, and like we discussed in chat, there was a huge interest in me getting some kind of a long signal to set up down here. And what I always look for when we have one of these situations where the market is just crashing down like this, I'll go to the bigger time frames, I'll zoom out, and I'll look at where would people be stopping out. So let's just look at it this way. Let's go back to a bigger time frame, like maybe an hourly chart, for example. And let's think about, from a technical perspective, looking at the FOMC day yesterday, that's where this big spike was. If longs were playing that flag long on the FOMC meeting, so they might be buying maybe off the hourly chart a break of that 57 area, or maybe at the latest they're buying over through 62 up here. So on these hourly chart flags. So from a technical perspective, where would they be risking from? Well, the big support yesterday was low 40s, so like 51-42 area. This, to me, this would be a clear stopping point. So if I'm looking at this from the perspective of a trade setup, obviously when we're looking at a trade setup in this sense, this is a wider, maybe more, maybe not so much a day trading setup because it's about a 15-point stop. It's a bigger picture setup. But if we're buying a flag like this, in perspective of even if it was a 5-minute chart, maybe a 5-point stop instead of a 15-point stop, this would be the stopping point for that trade. This is the clear point where that trade has failed. So if it popped up and then it rejected, there really wouldn't be much reason to stay long. If it breaks back under 42, that'd be showing us that bulls got caught, it failed to hold, and now it's reversing and continuing the trend lower, right, back under 42. So I like to look for those areas as areas that the market likes to probe through and stop out retail longs before sometimes making a bigger move higher. Now, it had that huge spike in FOMC and then that huge drop, but it still held that 43 area. So technically, people that were, likely if they were long anywhere here, they took profits into this push. But if they were trailing for a multi-day run, they likely would still have a stop under that 42 area. So we're in a situation, guys, where the market is just kind of crashing and crashing. I'll zoom out the chart and I'll look and think, where would people be stopping out? And I'm looking at it from the smaller perspective this morning. Like I showed you guys, if anyone was longing the morning, the stop out point is kind of under that 72 area, right? If they're playing this flag, they're playing it too late. Those several flags we saw. So one right there, and then if you can kind of consider this as another one. We saw a couple there on the 15-minute chart, but this is an hourly chart, so another one on the hourly chart there. These are buying way too high into too much strength. But if that trade doesn't work for them, where do they stop out? Well, in this case, bear flag back under 73 is an hourly chart reversal after a failed flag. So you can see that we attempted a flag, definitely not one that we would ever consider playing, but right there, a flag attempted, a flag failed. You can see the upper wicks showing that the sellers were fully in control there, but where are they going to stop out if that doesn't work? Well, for me, it would be under this 73 area. And then for others, it might be, if they're going wider, this area here. So there's these levels that I'm interested in, and this is where I want to see them clear through. But the biggest one was under 43, yesterday's support, and then yesterday's pre-market low, 37. Now, the way I look at it is, if they clear all those levels to the downside, who's left to sell? I mean, from the people that have been playing this from the long side since we tried to reverse from a downtrend back to an uptrend yesterday, we're going to likely run out of sellers down there. So not enough just to say we should just buy it blindly down there, but I'm looking at all the levels, and every level that was possible for the last couple days longs to stop out have been cleared. So who's left to stop out there, unless there's just a bigger picture event going on where people are truly bearish in the market and just want to sell and liquidate investments. This is sort of where I suspect that the sell pressure will dry up, is once they've cleared all the levels where sellers are likely to be, where buyers are likely to have their stops and sell. So the whole zone that I was kind of watching there, it's a loose area, but anywhere between I was even looking as high as 55 if there was something there, but it just kind of ripped right through that, and it didn't show any signs of bouncing there. But I'll usually sort of identify a zone with you guys, and I'll actually illustrate it usually with just a highlighted area on the chart. And of course, it doesn't necessarily mean that we're just going to blindly buy in there, but it means that if we get into that zone, you can be sure that I'm going to be very, very carefully looking for a buy signal in that area, so for a long signal. Now, for those of you that are on stream and chat or follow me on a daily basis, you know exactly what I look for in terms of the setup that I go for in these areas. I'm not going to go over that right now. There's millions of examples in the daily webinars. You guys all know that setup, but it just unfortunately did not happen here. We got into that zone. They ran all of the stops, all of them that you could imagine, from yesterday's FOMC buyers through 42 to even the pre-market low from Wednesday evening. Or the after hours, or early morning low. And then, once all that's gone, this is where I'm really going to start watching for the buy pressure, the sell pressure, to dry up. And unfortunately, this would not qualify as a long signal for me in this area. So I was hoping that we'd get a secondary opportunity. That secondary opportunity would be something like, we sort of finally see that every level's been cleared, and we started to see some life from the bulls. It's possible I could have gotten a signal on a little bit of a failed bear flag in here, and then something like this with a buy signal somewhere in this area, assuming that we're extended enough from the moving averages at that point. But not the case today. Today it just bounced right off that zone, and it was a little bit disappointing for that to happen, because it ended up being such a big pivot today back to the upside. However, a lot of the time those setups do result in a really, really good follow through and a good trail like this. And other times, because of the way that we time them, sometimes it'll just be a small win or close to break even. But it's a really, really good way to get involved in those bottom bounce areas and be pretty confident that you're at least going to get one or two targets because of the way that we time it and the way that the market is structured with the extension when we take it. And generally, as you guys know, there's very tight risk level typically within 5 points. So, yeah, anyways, guys, look, basically what it came down to is after we bounced from that area, we did about a midpoint correction. So if you think about where the highs were in pre-market up here, 50.90, the lows, 50.35, we did about a midpoint correction right there. This is where typically another thing that I'll note is even though this chart technically is still supposed to be a short bias because we're still in a downtrend on most time frames here, I wouldn't take shorts for anything more than scalps from here. As you see, there's a bear flag right here, and it did pull back, but it kind of held up off that zone. The reason why I wouldn't short and hold from there is again because we pretty much ran all the longs out through all of the possible levels where they would have had stops from earlier. Yes, there's going to be new longs intraday, guys that tried to buy the dip or guys that maybe bought somewhere in this area. But generally, like the bigger sellers, the ones that would have been in this from yesterday, FOMC, have likely gotten run under this thing on the big move down. So you can see that bear flag did find some sellers, but they bought it right back up. So what I tend to be more interested in, if I'm going to scalp in these areas, and I feel like at this point the chart wasn't really ready for bigger moves higher, I prefer to, I'm not against the idea of taking that short as a scalp, but I'm also not against the idea of waiting for the shorts to get trapped in that area and then scalping long over here. So shorting here, okay, but only probably for a scalp, and I'd probably use a break-even stop. Once we got the shorts now trapped here because they're trying to short a continuation, and it's now reclaimed the 5-minute chart trend here back over the EMA, this is a scalpable area to try to long too, right here, which then that pushed it higher. And then we have the high a day was the morning, and then we have a lower high here now, and then you can see that we started to create another lower high going into 12 o'clock. Remember, at this point in the day, I was very uninterested in doing much with this chart. So there's certain points and areas in the day and areas in the structure where the edge is extremely strong. And I think that one thing that a lot of people lose sight of or just don't aren't experienced enough to realize is that obviously there's certain areas where the edge is very strong, and that's where I get really focused. Again, the edge is going to be very strong for a really good risk reward trade somewhere down here if we get the right setup. But once we get into the middle chop zone here, the edge is extremely low. We definitely don't want to be trying to buy breakouts up here early before we see several areas where longs have gotten taken out in bear flags and that shorts have been getting trapped. So I didn't really do any trading after 11 a.m., just kind of waiting for this to give us the signs that it's ready to make another move. I'm going to move from a 5-minute chart to a 15-minute chart here because this time frame says a lot. We always want to be watching all the different time frames, but one of my favorites to watch, particularly in the futures and in the small cap market, is the 15-minute chart time frame. What this can tell us by looking at it is that, yes, we did get into that zone where yesterday's support, all the big levels were down there. We got into it, but the buyers picked up off of it. And then the buy pressure was still so strong they weren't able to break back into it. Notice that they tested it 3 times on 3 different 15-minute chart candles before moving higher. Secondly, right here on the 15-minute chart, we saw it on the 5-minute chart as well, but the sellers tried to come back in again on a 15-minute chart bear flag. Right? So we tried to, after this initial bounce, right here, the sellers tried to come back in, back under VWAP, back under the 15-minute EMA. I can get why they would try to short there. It had a failed flag over the VWAP area as well. We definitely wouldn't be buying up there on this type of day with this type of context. But I can see why shorts would short there. And again, I don't really have anything against it except for I would just scalp it. Because at that point, technically, yes, it's still in a downtrend, and technically it's still a sell or short bias chart. But as you guys know, I'm usually looking for shorts to get trapped and then to reverse it back to the upside, especially after all of the longs from yesterday have likely already been run out into the close or into the open this morning. So this is an interesting candle to me because you can see that we tried to break lower. It did work for a short scalp, but once again, it came back, and longs could try to take a scalp here long, but I saw some things on the hourly chart that suggested to me that this wasn't ready. And also just structure wise, usually after the size of a move in that time of day, right in the middle of the day, we just want to see more sideways. We want to see more attempts by the bears to try to take it lower. And we saw several. The first one I showed you guys on the 5-minute chart, the second one right here on the 15-minute chart that also would have been on the 5-minute chart. Another attempt here and another attempt here. It was after we saw all of those attempts and all of this structure being built, showing us that, the buyers were starting to regain control of this thing, starting within this zone here, but then leading into the afternoon, they kept really holding up over 55 on these attempts for it to move lower. And now at this point, we can kind of look at the chart and say, well, if shorts are involved in this, at what point will they need to stop out, or what point should they stop out? Well, to me, it really looked quite obvious that this downtrend is starting to become a problem for them back through 50.66. That was the secondary long signal today. I would have preferred, obviously, to have gotten the bottom bounce signal, but I was actually pleased that there was actually a second opportunity, because sometimes if the market really rips and reverses like that, sometimes there isn't a second opportunity, and you can kind of get left behind for the day. So I felt like that was nice that we had the opportunity to get in with fairly good risk. It was like a 66 long risking off 60 with a chance for this to really pivot back to the upside. At that point, the chart was still in a downtrend on the hourly chart. Remember, this is what the hourly chart looked like. We haven't looked at this time frame yet together during this webinar until just now. I'm going to clear the board again because it gets a little bit messy. But just so you can see clearly, just one thing that's happening on this hourly chart is that since the morning, remember we were talking about those hourly chart and 15-minute chart buyers getting caught in the failed flag, them having to sell under 72. Well, notice that when all through the pre-market session, we were holding an uptrend over that hourly EMA, and then that was reversed into a downtrend. We had the huge extreme move lower this morning, and that was now acting as resistance off its EMA. So technically, it's still in a downtrend. But this is why I didn't want to take any early longs. Structure-wise, this hourly chart, to get where we need it to go, we want them to try to break it lower. And notice how they just broke below the low of this candle at 11 a.m. into 12 p.m. And then it held. This, to me, is the pivot right here where this can turn back into, now burst into an uptrend. Our signal was lower than that, because that was like around the 70 area is where it bursted back up from a downtrend on the hourly chart back to an uptrend. So we got a little bit ahead of it. Of course, like I said in chat and on stream when we talked about and called out that signal there, it was a little bit of a tough spot, a spot where I saw enough short traps. I saw enough evidence that the buyers were regaining control of this. And like I said, I like to see several attempts, bear flag traps where they hold up. I saw 2, 3, 4 of them on several different time frames. Another one over here. Big key, though, is that they tried to break the hourly chart trend lower and failed right there. Now, when I'm looking at this from a 15-minute chart perspective, the shorts really have nowhere to go but to cover. I mean, they've tried several times here for this to break lower, and they could not get it to go lower. So I saw this as a spot where it could really pivot there, because it could start to move back up there. Now it could have rejected the hourly EMA, which remember was at 70 at the time, or maybe 69 area, so right around there. But there was a flag line being formed across the whole day here, and it felt to me like one of two things was going to happen. It could have just rejected the EMA at 69, and that would have been unfortunate because you're long at 66 and it's only a few points, but you can always bail out, under 63, which would have been back under VWAP. But best case is it takes out. Now I'm thinking about the opposite side. Where are shorts going to have their stops? Well, I think the savvy ones would have stopped out where I entered long at 66, or the intraday traders would have. And then these lower highs are other areas where I would suspect. So I'm always like looking at where do I think people are in the trade and where should they exit. And so this level right here, I figured if that got taken out, then that also takes out the hourly chart downtrend back to an uptrend. Then this level here is the other level where, so we had a high a day was first thing in the morning, and then this was the lower high. So for me personally, if I'm short here this morning and I get targets into all this, I'm going to let this thing test back higher, and I would have moved my stop here and then try to trail it for lower. So just logically looking at this and objectively looking at it, there's areas where it could become pretty obvious where retail traders are likely to put their stops. And so I liked this area for the long for a bunch of reasons. One is we saw all the attempts lower that failed to go lower. And the fact that right here it could really pivot back to the upside and push these shorts out in a big way. And this ended up, really trailing into sort of a home run, really. Obviously, it would have been way better to have gotten the bottom bounce signal, but that doesn't always. A lot of the time we do get a signal down there, but today it didn't do it. Must have just been too much buy pressure because it felt like that first 5-minute chart candle just got gobbled up so quick. It kind of took away the risk reward there. But secondary ended up, actually breaking that 90 area high, and we're only just now in the last 20 minutes of the day finally starting to see a little bit of a pullback. So now we have sort of this is the new trend here. So we have the low a day, 36. The higher lowish area was 54. And you can see we haven't retested that trend yet on this trend line. But yeah, there's going to be some very interesting levels to keep an eye on tomorrow. And today I was particularly interested to see if we could maybe close back over. This is a daily chart we're looking at now. Because if the bulls really want to get this going again, I think the first step to that is a close over that daily EMA. Really get a strong close in it. Maybe we're not going to get it today, but just I guess like to visualize maybe what a good bullish scenario might look like on this time frame, just hypothetically, would be like this. Well, if we close up over the daily EMA like that, and then perhaps let's just for example, let's say Friday we have a little bit of a pullback, and then Monday they attempt lower, but it holds up. Tuesday, I mean, this would be to me a very, very nice look for this chart to try to attempt to move higher and test some of these bigger levels up here. But yeah, today was interesting. There was a lot of range today. We did get a lot of confirmation. I think one of the big takeaways from the last couple days is that the buyers really are trying to remain present, just in the big picture. Between like 37 and yesterday's 43 to kind of like 50-ish, just whole area in here is just trying to really be a spot as of late where buyers are trying to remain present. And so far they're winning the battle. Of course, there is areas up above where sellers are winning the battle. But yeah, today, interesting day because we are closing so far. I mean, the market's still got 15-ish minutes left, but so far it looks like we're going to close back over the 4-hour EMA, back over the hourly charts. We're getting back in an uptrend. Here's what I want to look at for tomorrow. Is this zone is huge to me now. This is a must hold for bulls up over like 35 to 43 area. But now we have the highs from FOMC yesterday. Drag a flag line across so those are yesterday's highs. These are today's lower highs. We're looking at an hourly chart again. Just like any time frame or trade, once I see a move the size that we just saw here, now I want to see an attempt. I would like to see an attempt for the bears to take it lower. So what I'd really like to see tomorrow, as one general idea, and of course we'll go over a bunch of ideas in the morning like we always do, but if they try to take it lower down there tomorrow, and then they kind of hold up, I'm liking the look of this early next week potentially if the bulls want to try to regain control. I think that's a really good look for it. So again, it's always important to get those tests lower so we can reestablish if there's still buyers present at some of these levels from today. And FOMC, we had FOMC day yesterday, we had support at 43 and resistance around 63. And so, if we did have a bear flag tomorrow, for example, and we retest that level, and then coming into Monday, we're holding back up over 75-ish area, and then we flag through, that's a really good look, in my opinion, in my experience, for a continuation. So there's lots to consider there, but yeah, I just wanted to go through a little bit of everything here and just kind of talk about some of the stuff that I was watching today, in case you weren't on the stream in real time. Of course, all of these webinars are uploaded each day, often 30 to 45 minutes of content just like this to the websites to make sure that you're reviewing those at your leisure. And I think that's pretty much it, guys. So coming into tomorrow, 72, like sort of the 72 area, that's where there was a bit of a pivot right on the hourly chart. That's where we kind of went from, let's call it 70 to 73. Right in this area is where the hourly chart pivoted from being in this downtrend to ripping back to the upside. So that's an area of interest for me, for sure. And for example, like I said, if we ended up getting an hourly chart sort of clear out, which wouldn't be unusual after the size of the move we just saw. We just had a huge move from lows today up to these highs. So if they do break back under, that's a level I'm going to want to watch tomorrow to see if we can find buyers. And if we can, then we get back up here. That's like I said, then early next week we can start looking at flags. But I'm open to all kinds of possible setups and ideas for tomorrow. So I think we'll just, kind of come into the market with open eyes and open ears and just play what we get. But I hope that gives you guys some insights on using the multiple time frames. I think, again, one of the things that people tend to lose sight of is that there comes points in the day, especially it can be hard sometimes with futures because, if you're trading small caps, for example, there's several stocks usually that are doing big volume and that, will have breakout potential and be, very active. With futures, sometimes there's only a couple of really good opportunities a day. So you want to be present for those opportunities, and you definitely want to show up for the big moments where we get into big zones like this. I always want to be showing up for these moments here because these can create the biggest trades for me. What a lot of people lose sight of and what you want to avoid is trading the low probability areas. This area over lunch to me was garbage today. I mean, this is where I just walk away for an hour, watch a little bit from mobile. Don't exhaust yourself mentally or physically or anything in this area here, because all we really want to see at this point in the day, we had the market, create a high in the morning, created a low at 10 a.m. We've got back to the midpoint. Now we just want to shake out a bunch of longs, trap shorts, we're going to establish some levels. And that's what's kind of happening here. We're on these bear flags, we're shaking out longs. So guys that bought, wherever they bought this morning, kind of those bear flags will shake them out, get more shorts trapped and involved. And again, we just want a lot of sideways and a lot of that trapping until finally there's a point where, okay, now it makes sense. We've seen, I used this tipping tree analogy with you guys before where this is the size of the move right here. Tip it over like a tree tipping. And then it's usually somewhere around this point where we've seen enough consolidation, enough attempts lower, in this case, enough attempts lower, seeing a lot of levels hold. And then we can actually get an edge again in the market. So just want to make sure that you guys are avoiding not doing too much in this area and not really even exerting the mental energy to spend much time trading in that area. There's a couple big moments in the day to show up for most days. Other than that, the trickiest part is just avoiding this. This is where we're just building structure and building ideas for the later part of the day. And really the two moments to show up for today, three, were either if you're into shorting early, there was two failed flags here against the daily EMA. To me, the short was early, right at the open here. If you're looking at long, it's into the big zone down here if you get a signal. Not stepping in front of it generally, but looking for a risk-reward setup or a signal. In this case, no real signal there, just bounced really strong, so tough to get involved there without just blindly buying it. And then just waiting for the afternoon setup to happen, getting the several short traps, shaking out the longs, establishing where the buyers are showing up, where the shorts are getting caught, and where they're going to stop out, and then triggering that point, which was right here today. And then other than that, I'm trailing along as far as I can usually for these ones. But like I said earlier, I'm not going to get involved in a new long until this corrects. The correction that I would want to see for now is, like I talked about earlier, is now that we have this trend established, I likely wouldn't be taking any new longs until we break under that level and then come back. And then if the bulls show up again tomorrow, then I might start looking at longs again. Alternatively, if they want to test lower, like I said, there's some levels down here that I think would be nice to get retested. I'll probably be watching for setups down here if we got down there. So lots of potential and possibilities for tomorrow. A little bit of a step forward for the bulls today, but not a huge one because we didn't close over the daily EMA yet. We're still in a downtrend on the daily chart, technically speaking. Okay, still under the daily EMA. We still haven't closed anything above it. We still haven't been able to set up just yet this flag, which I think this is what's going to be a really if the bulls can recover this, I think that's going to be a big area of interest, is something in there. for the big picture players. And yeah, I think that's about it, guys. So, and then also with that daily chart, if it did that flag, let's say in a week or two, then the weekly chart is actually in a downtrend for the first time in a while. Remember, we had that massive run up over weeks and weeks and weeks of action. So that could help get the weekly chart back into the uptrend. The big macro point where this would be going really back into an uptrend would be, let's say that daily chart flag pulled through. Let's say it happens next week. Then the weekly chart's like this. Now we're back into the uptrend on the weekly chart again. So lots of interesting stuff to consider there, guys. Hope you enjoyed this webinar. I'll be looking forward to trading with you guys tomorrow. So I'll be here at the usual time. We'll go over a bunch of ideas depending on where the market opens. We'll establish our key levels, and we'll take it from there. Thanks a lot for tuning in, guys. Have a great night, and we'll see you tomorrow.